The markets are holding high, up near their highs, and we look to history for an indication of what to expect next, all while trying to pick the best trading shares and sectors. And Gary Glover is the one to guide us through. Good morning, Gary. How are you?
Yeah, I'm good, Chris. I'm good.
When you're looking at the markets right now, how are you approaching this week where we are with the indices and your trading shares? What's your approach?
Oh, it's funny, actually. I was actually just chatting to a sort of money manager this morning, actually, over a coffee there, and talking about how really in the US market, all the indices are up over 20% in 15 weeks. So we got basically 2 years of average gains in maybe 25% of a single year. So you got to put that in context a little bit as well. So that's that, in a normal year, that's you kind of always lock that away. So that's the risk here, is that we've really had an awesome quarter here, or quarter and a half. So it's a really, really big move in a short period of time. And we know historically when we've seen moves like that, we either get a quick pullback, something along those lines of like a 4 to 9% correction in the next 2 to 4 weeks is sort of what happens all the time there, or maybe you get sort of something like the Nikkei there, where you get like a sideways consolidation. I had like an 18-week pullback, just came back and sort of sat on the previous high before it went again. So you could get a time-consuming consolidation there. So just got some risk here, really, of some downside here, just because we've had some really big gains in a quick period of time. So I just think you've got to be a little bit cautious here. So to me, I look at it and think, okay, are we going to have a little quick release here, like something short and sharp, which we typically have done after these sort of big moves in short period of times? Or we're going to see some sort of time-consuming, choppy sort of corrective pattern, which is a possibility as well. I've seen some of those from some of the other indices in the past there. So, just most of those indices there, the Nasdaq's up pretty close to the old high, so it's a bit of resistance there. I think the S&P 500 has expanded to the 138, so a bit of a Fibonacci retracement from previous sort of drive up here. So it's sort of something that area of resistance to sort of watch for. We've already sort of saw a little bit of price action taking place at that level. We sort of did gap down off the CPI number, and then we've rallied 3 or 4 days, haven't gone on near high here yet. So we're using up a bit more time and sort of grinding it out. Haven't been able to take that high out yet. So definitely starting to see some resistance here ahead. So just starting to favour a little bit of a, either a consolidation there or a little pullback from this level here. So I think there's a little bit of risk here in the short term. So we've highlighted that these strong moves like this, particularly election years, they are sort of good signs for the longer term, but we just need to see sort of some sort of pause there, some sort of relief back there, which I think sort of 3 out of the 16 cycles that I looked at there just had a really quick pullback from maybe Feb into March, something a bit deep, and then continued on. Or we're looking for maybe some sort of contracted, messy sort of first quarter, which might drag us out to May, and then maybe see better times in the second half of the year, which is a normal sort of pattern after an election year as well. So either way, just hard to see, the market really sort of kicking too much further here. Let's say the trend's still positive. Obviously, anything's possible, but there's definitely some risk here.
Okay, so definitely risky because history is showing us on an annual basis, we're unlikely to have this sort of profit in 1 year, let alone 2 years. That becomes the average. But to do all of that 2 years worth of gains compressed into 1 quarter, that's sort of like 8 times the normal performance. So we're expecting some sort of congestion. When we look at the Aussie market, we haven't had that kind of movement, although we do have correlations with the S&P 500 and the Nasdaq, particularly with the highs and the lows, not necessarily the full run, which we haven't quite had over the October lows to where we are today. What would you see happening for the Australian market, given its sort of slight disconnect with the magnitude of the movements we've had for the last couple of years?
Yeah, it's a little different actually to the other indices because we're sort of probably lagged a bit here. And also we've had so many touches of that sort of 7,600 resistance level, and now we're sort of finally broken above it. So normally when you do break above like that, I mean, you can do like a little false break sometimes. Sometimes you get on get higher than fail. But it's normally done pretty quickly, Chris. Doesn't sort of hang around for multiple weeks and then sort of fail there. So I think actually we've sort of seen, we're broken out there, and then we've had a little bit of a, you know, I might say a slight rejection there, but so far it's sort of held high there after a few weeks there. So that's sort of somewhat constructive in mind, even though definitely seeing some volatility in reporting season here, seeing some sort of stocks gap up and gap down. We've seen a few actually this week. Some actually probably bigger sell-offs than, you know, I think last week we were seeing a lot of stocks gapping up. This week we're seeing a lot of stocks gapping down here. So, but yeah, bit of a mixed bag there. But yeah, technically still looks okay here, XJO. Just, yeah, it's interesting how US has kicked on looking a bit extended there. Yet we're sort of still hanging above here, this level here. So it looks a little different, which is odd, but sometimes it can be a little odd.
Right. So if that's the Aussie, we might have, it could hold tight, could be sort of like an accumulation or consolidation along that previous high. But Dow Jones, it has kicked on higher and further. If the S&P 500 and the NASDAQ, the risk is for them to pull back possibly quite severely or stable or just compression in time. And like you said, with Nikkei, it did consolidate for 18 weeks after having a similar sort of breakout. Is that same sort of thing on the cards for the Dow Jones, even though it has had a sort of a stronger breakout beyond the highs?
Yes, I think we're about 9 weeks above the breakout week now. So after sort of breaking that sort of high there, we've sort of kicked on another 8, 9 weeks. So that's had a fair move there. So now it's been past that 15 week 19.97. So I think we're well over 20 here now after last week's slight touch there, but bit of a spinning top there last week in the market. They obviously went to a new high, then sort of gapped down, come back to retest there. So just starting to see a little bit more volatility there as well. So, yeah, I mean, to me, ideally here, we'd probably consolidate here, come back to the old highs somewhere around that sort of 36 and a half, sort of, 36, 8. And then start to build again there. So maybe come back another 3 way back to that low there. Maybe do that, whether we do that fast or whether we do that slow. Probably want to sort of see more of a drawn out. To be honest, you probably prefer to see it drawn out to May there. Yeah, something like that would be ideal. And then sort of build again for the second half. Yeah, just pretty big gains, pretty short period of time here. So just think we're due for a bit of a consolidation there. So, yeah, so just. Me personally, probably tend to take a little bit of risk off here at the moment. Yeah.
Well, talking before air, you were talking about your portfolio, the trades that you're putting on, the different sectors, and you are still seeing opportunity despite this being not the most inspiring outlook on the indices. So as we move through beyond the top 50 companies, it is reporting season, there is that volatility, but you've been having quite a fair bit of luck with different parts of the market. So where are you finding opportunities at the moment on the Aussie market?
Yeah, definitely saw some of the lithium names, sort of rare earth names that had a bit of a pop there last week. Some of the gold names as well, but obviously they've come back and congested as well. So some stocks showing some relative strength in those areas. So definitely sort of pockets there of sort of interesting price action for me. So yeah, just sort of watching some of those names there. So I know it's had a little bit of a pop. Yeah, I guess again that the Pilbara there sort of, I like the fact that we had a big sort of washout there, some big volume there. So it's sort of an exhaustive sort of low sort of pattern there. Had a nice bounce there, sort of taken, broken above a swing high. So a bit of a change of character there, change of the downtrend, and then we sort of start to build here. And then since then we've got a sequence of sort of high lows here. So it's pretty constructive, starting to see volume come in at each of those lows there. So a bit of a building sort of basing pattern there. So if you look at sort of that March, sort of April, May period, sort of last year, Chris, that was pretty similar. So we washed out a bit of a low there. Probably the volume is probably less striking than it is now, but we've still got the same sort of construction there. So a bit of a base boarding, and then it sort of built for the rest of the year and went higher there. So got some interesting sort of setup here. Yeah, just sort of constructed sort of base building characteristics. So yeah, do like to look at this on the weekly sort of setup. Like we showed that the last couple of weeks. It's a big Fibonacci level as well for PLS. So looks pretty constructive overall.
Right. So in that lithium space, so your minerals mining. What about IGO? That's one that's in your report this week. What's happening on this chart that's really caught your eye?
Yeah, so we sort of again got that sort of first low around that sort of 750 there was quite exhausted there, and there was some big volume into that low. Then it's sort of obviously come back and retested that low again. We have seen elevated volumes there down at those lows again, so sort of possible accumulation starting to take place there. But technically we saw that little descending wedge pattern and a bit of a breakup throughout that pattern there end of last week. So pretty good volume on the break as well. So pretty volatile. I think it was it's gapped up to 8 here early in the week. It's back down to the low sevens again. So this one's definitely pretty volatile. But you do often see that volatility, that generally that sort of high volatility move sort of doesn't come in the middle of the moves. It sort of usually comes in at the end or the start. So it usually comes in at the highs or comes at the lows, that extreme volatility. So pretty constructive there, I think. Got a new CEO in place there for, IGOs. They usually, come in, clean the house a bit. So it's definitely seen a bit of that activity happening there. So some of the sectors, obviously lithium, sort of copper, been a little bit suppressed there. So just starting to see some price action improve in that area as well, some of those prices. So yeah, just this one sort of might do a little bit of a base building here, but does look sort of constructive to me, even though it is a bit more volatile. Some of the others probably got maybe firmer sort of price action, but this is sort of one there that, see how taking a pretty heavy hit, 16 down to sort of 7 here. So, it is jumping pretty heavy on the updates. So, but it just might be a little volatile here, this one. So maybe it's sort of one of those ones that sort of start a little small there and maybe build into it.
Okay. Well, staying on that mining services theme, we've got mineral resources. This one hasn't had the same sort of washout to lows over the same period, but definitely come back. So it was touching just shy of $100, and percentage-wise, big move back to where it is now, sort of just near 60, under 60. You've got FB here, so I take it that's a false break. I mean, undercutting the low after a bit of a washout, and then the behaviour there with higher volume.
Yeah.
Is that the main draw card for mineral resources at the moment?
Yeah, I mean, I think it looks quite good. Apart from obviously the long-term trend line break, but then it has sort of, has broken below that and then gone above it, broken below it, gone above it and then broken below it. So it's now sort of making that line less valid there just because it's not respecting it as much. But yeah, lastly on the chart here is we can sort of see that we've come back 2/3 of that range on the weekly, and that's a level where we kept bouncing from there. And then we have got a bit of a false break here and then recovered there in the last few weeks. And we've definitely seen the volume pick up a gear as well. So good signs of accumulation taking place there, sort of around that sort of $55, $56 mark there. So it does look pretty constructive there. There's, pretty, probably the quality group in this sort of, in this space here, mineral resources, the kind of largest sort of cap there, quite diversified as well. But yeah, it does look pretty constructive to me. But yeah, do like to sort of see those false breaks and go slightly lower and then recover there. It's a good sign there. So, just some pockets there look pretty interesting to me. So yeah, mineral resources definitely one of those.
Staying with the resources, I look at resources on the mineral sands and those who can also sell into the solar capture feeding into the EV side of things, or a few of the smaller caps we've seen on the momentum list we talk about. But I look at larger cap definitely in that space from the mineral sands perspective. 0, 1, 2, 3 again, but this time you've also got a wedge in there. So is this one sort of lining up a few things and a few things to dissect on the chart?
Yeah, so the weekly chart there shows that, pretty major downtrend there, but we saw that really exhaustive type behaviour at the low there. We saw big volume come in on the first bounce off the low. So again, you sort of, had that descending wedge there, bit of a breakout, hug the line, drive again. But what's most impressive there is actually the volume levels up here. So again, we're sort of starting to see some accumulation starting to come in there, and then we're sort of starting to see more sort of sidewaysy behaviour there, pretty light volumes on the pullbacks, and then starting to see a bit more volume coming in on the upwards there. So do like to sort of see those sort of, second, third, high lows sort of set up there, because then you sort of each pullback gets shallower and shallower there, obviously. It's just a good sort of pacing sort of pattern there. And I guess, the closer you can buy to those little last swing low crests as well, so you get a pretty tight stop in there. And then obviously if we're wrong to break that, we're out. If it runs up here, then, basically looking to sort of, some really good upside potential there. But the weekly does look pretty interesting there. And the daily setup there just sort of adds to the positivity there, just with the short-term setup there. So does look pretty constructive to me. And again, it's another one that's sort of probably halved here in the last 12 months. So it's had a pretty decent sort of pullback here.
So another one in the space is Capricorn Metals, slightly different focus than mineral sands. But if you look at the chart, it's consolidating. It is a weekly chart, but it is at the higher end, so the top right.
Yeah.
We're kind of congesting in the top right here, kind of then sort of tightening up with a bit of a coil compared to sort of 12 months ago at the volatility side of things. What's the main aspect you're looking for here or to come from Capricorn Metals?
Yeah, so this looks more like the charts we look at on Fridays, Chris, sort of high momentum. So those stocks that show relative strength don't show much weakness there, and all of a sudden they start to break up for the top side and then really run that. So just amazing here. We've just got sequence of sort of high lows. So the pullbacks are getting shallower and shallower and shallower, and the whole thing's just sort of really congesting under the high there. So it's got that sort of that's that sort of high momentum type of relative strength sort of characteristics. So yeah, price action really tightening up here. So yeah, definitely one there. And the sector has been a little weak too. So that's when you sort of see the rest of the sector be pretty weak, and you're holding pretty tight and not showing much weakness, that's a really good sign as well. So I think the relative strength there is definitely kind of propelling here for this one. I do like to look at this. Looks pretty positive actually in what has been a weak sector. So as soon as that sector finds footing here and starts to turn up, we know historically that the strongest stocks that have held up the best are the ones that sort of lead here. So pretty constructive for Capricorn. So yeah, I haven't moved on this at all actually, but I'm just watching this really closely there. But just do like what I'm seeing there. Just probably looking for something low risk, to get my feet wet there. But it is pretty constructive.
Well, that sounds a lot like, was it October 2 years ago when you were looking at the market turning, you were saying this is what we'd expect coming into the presidential cycle, a good strong run here. What we want is when the market turns, we want to be holding those that have already had higher lows or those that are congesting and holding higher as the market's been dropping. So what you're talking right now with Capricorn in the context of gold, the whole gold sector, sounds very reminiscent of when you were on the right side of that. You picked the leaders and you've got some really good trades in there. So it'll be interesting to see how this one unfolds. If we can get the gold sector to kick in, this one might run harder.
Yeah.
Still in that gold space though, you've got Perseus Mining, another gold company. Is this an inverted head and shoulders that we're looking at here?
Yeah, a lot of big head and shoulders.
See that one coming from you too often?
No, I don't sort of, not one that I sort of trade too often there, but I did sort of catch my eye there just because I was looking through the sector thinking, is there any other names? I saw a few names looking okay. Just sort of noticed this sort of, it's come back in little sort of three waves there, come back and retested that zone there and bounced off of that sort of inversion there. So, just not sort of seeing any heavy sort of sell-offs as well, like a lot of the stocks. Like a lot of the stocks have pulled back a bit in the gold space there, but I haven't seen any really aggressive selling through that. So, do like the fact that it has recovered there from that sort of shoulder level. So, yeah, if you see a bit more consolidation here, this is definitely one to have a look at there. So, again, still got a sequence of sort of high lows building on the stock as well, longer term. So, much of the things a bit broadening in nature. But maybe that's the, if you look at, remember that Livermore's speculative chart with what they call the accumulation cylinder. So it's probably a little large for that one, but still sort of holding up okay here. So, just looks constructive there. I think if it can sort of hold that sort of low 160s there over the next week or two, there, it's definitely one to sort of keep a close eye on there. So, yeah.
Now, another one in a different space, Growth Point Property, very different from the mining ones you've got. Why this one? Why property? And what's on this chart that gets it into your report this week?
Just so, some of the property names have had a nice little bounce there, and then had a bit of consolidation moving up there. So obviously GMG, a few others, I think we were showing Dexus previously, I think Morgan Commonwealth. So we did feature some of these there a few months back, and they've all sort of bounced. I think at the time we were looking at some of the accumulation style sort of Wyckoff charts as well, and they really sort of washed out into that sort of either into that sort of spring or sort of short term sort of lower stuff there. So just kind of fill the sort of short term characteristics. So just starting to see some volume coming in some of those stocks, and then again it's kind of pulled back here, a nice little three-way pullback, and it's holding up pretty nicely there. So some of the stocks are struggling to go down here now after having had a pretty good run. So it's just kind of constructive there. I thought Lend-Lease was sort of one to keep an eye on there. Just hadn't acted on Lend-Lease as the next chart there, Chris, as well. But just because I thought, it's the whole thing sort of congesting here, trading the sideways there. It did needed to break out above here for me to get interested, and it hasn't done that. It's actually broken down here. So I reported on Monday. So I thought it was sort of one to watch there with the report. But I think it's come up short there and gapped down there. So that kind of rules that out completely. But, we just got to watch these setups and watch those consolidations and watch the breaks there. But, price action was pretty interesting. There was some good volume on that drive up. Sort of dried up on the first pullback. Volume started to come in the last few weeks there. So the chart was actually looking pretty interesting. This is the sort of, this is the side about actually waiting for the signal, Chris, as well. If you try and jump in early, sometimes you might get hurt, which is what would be the case here for Lend-Lease there. So you're sort of waiting for that, waiting for that sort of confirmation there all the time as well. This is why you got to keep that reporting season in track as well. But we mentioned on the Friday's report too, like a lot of the pros won't trade into earnings, or they'll basically lighten up as well. So if you've got an earnings result there, me personally, I don't. I definitely will scale. I will hold some positions into earnings, but I definitely won't hold a full scaled up a large position there. I'll definitely try and minimize my risk. I'll probably only stay in my position if I've got a little bit of a buffer in my position as well. So, but yeah, it's been a interesting sort of chart. But I guess almost went full metals by the last three stocks. But yeah, I think that's there's a bit more going on in that resource space. For me personally, I think that's probably where some opportunities still sort of lie. Whereas I think large parts of the rest of the market look fully priced to me, so it's hard to find value there. I still can't fathom how these banks are sort of trading on, sort of multiples that are sort of outside of the normal sort of 10 or 15 year sort of standard deviations. So there's no earnings growth there to come for the next couple of years for banks, yet they're trading on multiples well above historical averages. So that's not a safe place for me to invest. I know that, I know we're here to try and find the things that are going up here and get them going up here, but they've really moved well beyond where they normally can do. They look, every now and again, maybe every couple of years, you see something like that. But it's, I know where the averages are, I know where the valuation points are. So, yeah, for me, there's too much risk in some of those stocks as well. So we just got to look for the sort of low hanging fruit there, look for opportunities there. But I guess with the market being a bit standard, particularly the US markets there, I think, it's just time to be a little bit more cautious there with some of those big gains already met.
Well, that's a good insight to take from top 50 companies is possibly being overextended, a few standard deviations to the upside of price earnings. However, there are opportunities in the small mid-cap or the mining space, possibly property too. So still opportunity out there, but you've got to know where to look and how to look. And I guess that's why we keep coming back to you, Gary, to share the insights. And we say thank you very much for doing that this week.
Thanks, Chris.
If you want to watch what he's talking about on the Friday videos, there's a whole playlist on the right-hand side. Some of his strategies like 0, 1, 2, 3 bottom, springs, false break, reversals, that kind of thing. There's a playlist. And over on the left, that's where you can follow Gary, his Twitter handle or his X handle to see more of his updates.